Yeah, it's David Hoppe, Gamma Law in San Francisco. We work with video game companies entering the U.S. market, seeking investment, and generally game company transactions. And that is not the right button. All right, there we go. So everyone knows crowdfunding is growing dramatically. Lots going on in the space, lots of money being raised. This chart exemplifies that in part, and I say in part because it does not show 2013. 2013 number was twice that of 2012. Everyone knows at least some of these logos. These are crowdfunding websites. Kickstarter, of course, being the largest, but really sort of US-centric. Indiegogo has accommodated campaigns from various countries. Kickstarter is limited to a few outside of the United States. But one thing great about Kickstarter is their statistics, which are available on their site and are updated in real time. Games is interesting. Among all the categories, probably the biggest disparity within games, and that is because games is the largest dollar category of all of these. And of course, most people know Kickstarter for film, video, music types of projects. Games account for fully half of all of the projects that raise over $1 million on Kickstarter over the life of the site. However, games account for only about 8% of the projects that are on the site, so pretty dramatic. Unsuccessful project statistics on Kickstarter. An unsuccessful project, of course, is one that does not reach its funding goal, in which case you don't get anything. Not exactly sure why I put that slide in, but if you kind of look closely, you can see that games break down pretty much the same as the other categories in terms of what percentage of funding goal is not reached among these unsuccessful projects. It always seems like at least every few months there's some big game that far exceeds its target and makes the headlines. And most recently we have Mighty No. 9 from Japan. 4 times the amount that they originally requested was raised, 67,000 backers. So just in kind of brief summary here, 10,000 some campaigns on Kickstarter to date, 35, and sorry, those I think are successful campaigns. 35.6%, sorry, those are campaigns in total in the category. 35.6% of those were successful. And despite the fact that games is the largest dollar category, actually only 28% of those game campaigns raised over $10,000. 72% of them were small campaigns. So that's actually interesting to know if anyone, and I would guess those $10,000 campaigns are probably being run by people other than those in this room, but just the same, an interesting statistic. Just by way of comparison, in music, we had 3 times as many campaigns, a higher success rate, and an even higher percentage of campaigns that are seeking lower dollars. And it's similar with film as well. The most interesting development in the space of crowdfunding here in the last 2 years is the development of what we're calling equity crowdfunding, which means actually selling stock in your company online. Not just giving out t-shirts or posters or providing other rewards in exchange for people who want to support your project, but actually providing a value proposition to people who want to invest in your company and hold stock, presumably long term. Before we leave reward crowdfunding, which is the term that's used to describe the traditional model that we've seen to date, t-shirts and so forth, it's worth noting that reward crowdfunding is not without its caveats. And there seems to be an impression among a lot of people, even a couple years into this, that crowdfunding is free money. It's actually not, and I didn't go into the costs of raising the money in this short presentation, but they're substantial, especially in the lower dollar brackets. But probably of more significance is the fact that this money is taxable. And in the US and no doubt in Finland, although I actually don't know anything about Finnish tax law. I should mention, actually, I did live and work in Finland several years ago now, and I'm really happy to be back. So money's taxable. There are ways to mitigate that. Consult your tax advisor. Just the same, reward-based crowdfunding is essentially unregulated, both in the United States and in Europe. It is a good idea, though, to run the campaign through a separate company, if possible, or at least segregate the funds. And unlike some of the new regulations, as we'll see coming from the US, there's no requirement of a US entity to raise money through reward crowdfunding. Equity crowdfunding, these people become your investors, your stockholders, and perhaps in some sense become your boss. Later on, you may have to live with them for a while. Well, Europe has sort of led the way in equity crowdfunding, and that's not because European regulators have been so forward-thinking as to come up with some comprehensive crowdfunding regulatory regime. It's rather simply because, in some ways, European securities regulation is a little more flexible, and people have, to date anyway, found ways to run campaigns and sponsor campaigns within the scope of the existing regulations. Just the same, it continues to be, at least for the time being, sort of a country-by-country basis, and without a unified regulatory system. Well, the United States has a very conservative securities regulatory system that was set up after the Great Depression and has changed very little since that time. To their credit, the US Congress 2 years ago came up with this idea of a crowdfunding law, which would provide some certainty for people who wanted to raise money through crowdfunding, through equity crowdfunding, and hopefully promote the sector. Here's the bill being signed into law 2 years ago. However, the law has been on the books now for 2 years, but if you go online and pitch stock in your company, you could go to jail. And that is because the Securities and Exchange Commission has not yet issued the regulations implementing the new law. There is a tremendous amount of resistance within the regulatory community. There's a lot of skepticism. There's a lot of concern about fraud. As you'll see here, 2 quotes. The first of them, a sunny, optimistic quote about the everyman being able to buy stock online. And the second one, not quite so optimistic. The thing about crowdfunding is that it brings together unsophisticated issuers with unsophisticated investors. What could possibly go wrong? Well, actually, the law that was passed 2 years ago was set up in such a way that I'm not sure too much can go wrong, except that maybe the sector won't develop very well. And that is because the law has built in a lot of restrictions already. Companies can only raise a certain amount annually. People can only invest a certain amount annually. And all this has to be through a crowdfunding website that has been registered with the SEC. There's required disclosure when you launch the campaign. Audited financials. We'll talk more in a moment if you're targeting more than $500,000. There's a very limited ongoing reporting requirement. You need to make your financials, file them publicly once per year. And under this mass market, we can call it equity crowdfunding exemption, the campaign has to be run through a US company. The size limits per company, $1 million per year, and per investor, $2,000 to $100,000, corresponding with income. Financials, and this is the part of the law that has attracted the most concern. Indigo will calling this a massive deal breaker. If you want to raise over $500,000, you have to get your financial statements audited. In the US, the cost of that is estimated $8,000 to $30,000, and probably more. And those numbers are for a relatively new startup. So those restrictions that we just briefly ran through may make many of us wonder what's the value of this new law in the US. I need to have a US company. as a European developer or US games company. I have to spend a lot of money, maybe on US accountants, US legal advisors, so forth. So just to step back for a minute, in the US and certainly in Europe as well, in addition to the public markets and the public exemptions like this one we've just discussed for crowdfunding, there is a massive pool of funds that's available and that's trading hands on a daily basis that does not go through these channels, and these are private placements. These are wealthy individuals. They are investment funds. They're institutional investors, estimated 4 times the capital available on an annual basis, $1.2 trillion compared to the IPOs that are making the headlines, King and others. Just a word about what this private regulatory regime is all about. So statistics on who these accredited investors are. One thing here is that audited financials are still required for private placements in most cases. So what does this have to do with crowdfunding? Well, as it turns out, that the new law actually has a special accommodation for equity crowdfunding campaigns that are directed at accredited investors only. And there's a few sites that are doing this. Kickstarter, interestingly, has said we're not interested in equity crowdfunding at all, whether for accredited investors or for mass market. So, if your crowdfunding campaign, equity crowdfunding campaign online is directed at accredited investors and you only accept accredited investor money, suddenly a bunch of those rules go away. There's no limit on the size of the offering. There's no limit on how much each investor can invest. There's no ongoing reporting requirements, and there's no requirement of a US entity. There's also no all or nothing campaign requirement, which means if you don't reach your goal, you can still take the money home. So at the end of the day, I think what we just discussed here, the private placement option for an equity crowdfunding campaign in the US is one that offers a lot of potential for European game developers and European other independent game companies. However, we still have the question, because this is such a new channel, is the amount of work that's required to do this and the cost, is it going to be worth the amount of money that's available through these new channels? I guess we'll wait and see. Thank you.